Investors in Nigeria's fixed income markets have switched to the Treasury bills market as investors move to meet unmet bids from the 44.23 billion Naira Treasuries auction. Kenneth Onuoha, team member, Assets and Liabilities at UBA, joins me for a market update. Kenneth, thank you for joining us today.
Thank you for having me, Esther.
Well, the market is wrapping up the week. Bring us up to speed on trading today at a different segment. Let's start with liquidity levels of the market.
All right. The week, like we know, was punctuated by activities marking the Democracy Day celebration in Nigeria. So on Monday, we started off with system liquidity opening at about 212 billion in debit. That same day, we saw NMPC withdrawals to the central bank worth over 177 billion naira. Fast forward to Tuesday, we saw system liquidity open at about 261 billion in debit. Some form of respite did come in on Tuesday with the special intervention refund across some number of banks, and we also saw CRR activities where a few banks were debited and then a few banks got some refund. This prompted system liquidity to drop to increase actually to about 187 billion in debit by about 71 billion credit position. Now, what that led to was we saw a lot of activities in the SLF window and then prompted OBV and overnight rates to increase respect by 61 basis points and 53 basis points to close at 30.64 and 31.16% respectively. Moving on to the fixed income space, we got an auction notice that the auction was the pre-scheduled auction for June 12th. The NTB auction for June 12th was moved to June 13th with settlements to happen on the same day. The total offering was about 44 billion, and we saw subscription levels hit about 407 billion. By the end of the day, only about 55 billion was sold, just 11 billion above what was put up on offer. Saw stop rates drop by 20 basis points, 1 basis point and 17 basis points across the three standard maturities to close at 16.3, 17.44, and 20.5% respectively. Essentially, on the secondary market space, on the T-bills, they were just cautious trading. There were interest seen on the newly issued NTB, 1-year NTB, but then, of course, because the size that was issued was not exactly significant, we have not seen a lot of trade happen on that space. On the bond side,
sorry, Kenneth, if I could just come in here. I wanted to just talk about the stop rates drop at the NTB auction. You said by 20 basis points. Is this something we should keep an eye on going forward? Perhaps maybe a couple other drops coming?
Recall that the CBN governor at some point said that the activities were going to be inflation targeting. Now, what we have noticed, however, is the fact that as opposed to the comments he made earlier on where he said the rates will continue to go as high as possible in order to target the inflation, we are seeing drops in rates across all the securities pretty much. Should we keep an eye on it? Well, especially the system is the DMO is trying to ensure that the debt profile is not exactly, the cost profile is not exactly on the high. So that essentially is the reason why we are seeing the drops. But the yields are still quite impressive.
Right. I mean, looking at inflation, we haven't seen a significant drop. Month on month, we did see in the last 2 months, but of course, with the energy subsidies removed and all of that, we're expecting that to climb back, or we're expecting the data on Sunday. But I guess we'll wait and see how that plays out. But you're right. I know that the CBN does have that plan to begin to pull back at some point, because it does have implications for debt servicing for the fiscal authorities. What about the FX markets? I know that we were talking to an analyst earlier. He did tell us that there was ample supply, if I could use that phrase, but not too many trades because obviously it was too high for those who were bidding. What can you tell us?
Very true. The FX market essentially yesterday was quite calm. We saw investors pretty much on the sidelines, and the obvious implication of that was that turnover dropped about $96 million yesterday, which coincidentally is the lowest we have seen since June. Now, NAFEM rates dropped by about Naira to the dollar dropped by 2 Naira for 2 kobo to close at 1476.24. The opinion of the analyst that actually told you that the rates were pretty high is very true. Of course, the system liquidity currently is in the negative region, albeit the hope that has come, the respite has come in is FAC. We've seen some elements of FAC being paid across alongside signature bonus paid. So that would, of course, cause a lot of activity in the FX space. Also, with the news that came in with that, the World Bank has actually approved $2.25 billion for Nigeria for both AMO and reset projects. So clearly, we're positive that we'll see the effect in over time.
Right. That was gonna be my next question. Market reaction to that 2.2 billion. But let's talk about outlook for the coming week. I mean, there hasn't been. I'm not sure if you've heard if there's been any official announcement of the two-day, public holiday next week. But I suppose markets is going to have limited trading days next week. But what is your outlook for trading in the coming week?
All right. Pending when the announcement is made, we do expect that the interesting thing for us to note that we see increase in system liquidity. Like I said, elements of FAC paid were paid in yesterday, and then some elements were actually paid just before I came on air. We've seen the SRA being paid. We've seen signature bonus being paid. Of course, that would help spike a increase in the system liquidity position. We also expect coupon payments next week, about 227 billion being paid on the 16th, which would obviously translate on Wednesday and Friday. And then we also expect almost maturities about 15 billion. So that will cause a lot of activity in the money market space. But the main thing to look out for in the coming weeks, would be the bond auction that's to happen on the 24th. It was supposed to happen on Monday, but that has been moved to 24th.
All right, Kenneth, we're going to have to leave it there. Thank you for talking to us today. Appreciate your time on the show. Kenneth Onuoha, team member, Assets and Liabilities at UBA.